Welcome. In this video, we're going to talk about something I call focus to profit. It's probably titled something else on YouTube, something along the lines of how to truly develop your trading edge or how to solve the biggest trading problems. I haven't quite decided at the time that I'm recording this what I'll title it on YouTube, but the general concept is focusing to profit. And I'm going to start with a series of questions that if you really think about and you can't answer to the positive aspect or you can't say yes to them, then you should get tremendous value from watching this video. So let's really start there. Let me ask you the first question. Do you feel like you have a clear and concise edge on the market? Meaning every trading session that you go into, in your gut, do you know that you have an edge on the market that you're applying to the market that gives you the ability to consistently and reliably pull capital from the market? Do you really feel that? Or are you unsure? Or do you not know? The next question I'd ask is, in your trading sessions, are you often overwhelmed? Or do you lack trading focus? This should be a really simple answer. You should either know whether or not you're overwhelmed on the majority of your trading, and you should really be able to answer if you're focused. When you sit down at the end of your trading session, can you look at that and say, I was tremendously focused, I did not get distracted, I didn't see something moving on a scanner, I jumped over to that chart and I looked to apply my edge on the market and I started trading that, and some trades went good, some trades went bad. It's stuff like that. Do you have focus? Are you overwhelmed? Next question I'd ask is, do you start every trading session with clarity? With absolute clarity, a clear head, a clear mind, clear focus. You know exactly what you're going to do. There's no questions at all. If you can't answer really yes, if you can't flip that yes to every single one of those questions, then in this video, you'll discover how you can solve all that. And one thing I won't do is I won't hold you in suspense. This is a really simple answer. And the simple answer to this is you need to focus all your energy and time on one single trade idea. And I put in parentheses there, one focused trade setup. Now, if you've been following me for any amount of time, you know I like the concept of thinking about your trades as a trade idea because it encompasses every component of the trade. When you think of a trade as a trade setup, you are focusing too much on the entry aspect of a trade. So one way I explain this is if you have an idea for a novel, well, that idea changes as you sit down and write and as you go and think about the characters and as you move forward. A trade is the same type of thing. You have a trade idea, and then that idea evolves as you enter the market, as you continue to trade that idea, and it should evolve. It should never be static. A trade idea should never be static. The markets are not static. Whatever is affecting the markets is not static. It's always changing. Your trade ideas should be able to adapt, but generally they have a core concept, just like a novel. If you're writing a novel, there's a core concept of what that novel's about, the underlying themes. It's the same type of thing if you're looking to trade. Now, I add one other really important thing to this. Beyond just one single trade idea, you need to do something else. You need to focus on your single trade idea every single trade session until you master that trade idea and it becomes profitable. Now, one of the first things you might say is, well, what if it doesn't become profitable? It's a simple math issue. If you're focusing on one single trade idea every single day, and I'll say this again, if you're focusing on a single trade idea and it doesn't become profitable or it's not able to become profitable, then it's real simple. That trade idea is not a good trade idea. It's a math equation. If your equity is not growing, if you're not pulling capital from the market successfully and reliably, that's a bad trade idea. You need to either adjust that trade idea, which you'll be doing anyways, or you need to forget that trade idea and say, this trade idea that I've developed is not good. The math tells me right here, it's really cut and dry. It either works or it doesn't. You're either able to apply it every single trade session And there'll be some trade sessions where your trade idea will not have an opportunity to trade. That doesn't mean that it's a bad trade idea. It just means that your setup, your trade idea, and how you find your trades didn't present itself, or you missed a trade. But that doesn't mean that the math behind it isn't profitable. That's actually an opportunity for you to go back and say, well, if I would have took this trade idea and applied it, what would have happened? And why did I miss it? But I bet most people that are watching this, and I know this because I do one-on-one trading and I have training myself and I talk to traders, especially new traders. I can almost bet that most people that are watching this, you're not doing this. You might be getting up and you might be starting your trade session and you see something moving on a scanner. You go look at that chart and maybe you do a trade setup and you say, I'm going to quickly scalp this. And then something else is moving and you say, oh, that'd be a good swing opportunity. And you go jump on that. And then something else is happening in the market, or you see something on Twitter and that piques your interest. And then you go look at that person's chart and that looks like a good idea. So you trade that. You're all over the map. And one thing I'll probably say time and again in this video is that it's you against the market. There's no one else there to help you here. It's you against the market. So you need to focus your time and energy on finding an edge in the market. And the best way to do that is to focus on a single trade idea until it becomes profitable. So in this video, I already kind of jumped into it a little bit. We're going to talk a little bit why this is the best way to go, especially if you're a new trader. The other thing we're going to talk about is how to do this, tips and steps to create a single trade idea. And at the end, I'll share some examples from my own trade ideas. So we'll do an example in the equity market, in the crypto market, and in the Forex market. So I'll share specific trade ideas that I trade in the markets. I'll share how I find these ideas. I'll share how I walk through some of my technical analysis. And I'll share the overall process that we'll talk about in this video. So you'll get to see some live examples from multiple markets. So let's jump right in. Let's talk about why you need one trade idea. And I'm going to add something here as well. You might be trading one idea, think you're trading one idea, but I can almost guarantee that you are not doing something around that one trade idea that will make you highly efficient. I see this time and time again with new traders, mainly because they haven't thought about this at a deep enough level to really understand how to do the most critical things to ensure that they are consistently growing to become a good trader. They haven't systematically sat down and thought about this, and we'll be talking about this in the video. The first is we all face this. What is more important than capital in trading? Of course, if you lose all your capital, then you don't have the ability to trade. But even before that is time. It's something none of us can get back. It's something that oftentimes new traders or people looking to develop an edge in the market, they're not only not using their capital efficiently, but before that, they're not using their time efficiently because they really haven't sat down and thought about it. They really haven't sat down and said that maybe you respect capital to the point that you should respect it. Meaning that you know that it exists, you know that it's a tool, you also know that it's man-made, you also know that it's really just numbers, and of course it gives you the ability to have the things that you want in life and to survive and everything else. But at the end of the day, you do have to respect it. Before that, you should respect time. It's even more important than anything else. So if we keep that focus and we say, okay, well, you're respecting time, the next thing when we talk about successful trading, well, the first thing successful trading is about is risk management. Risk management to your time, risk management to your capital. The next thing trading's about is the efficient use of capital. You can look at your P&L, you can look at your trading sessions, and you can say objectively, did you efficiently use the capital that you have available to put into the market? It's really a simple answer. You can look at this over a single trading session. You can look at this over time. So it's a simple answer whether or not you're efficiently using your capital. One thing that traders don't do often, because they're so focused on numbers, is they're not looking at, and I say capital numbers, they're not asking themselves, did I efficiently use my time in this trading session, in this trading week, in this trading month? And how do I consistently improve my efficient use of time? We'll be talking about that a lot here in this video. Now, to implement all this, this requires at minimum if you just take these three components or these three pillars of what successful trading is about, it really requires a couple things. First up, having a clear and concise plan every trading session, because if you don't have a plan, you're not going to have good risk management. You're not going to efficiently use your capital, and you're not going to efficiently use your time. The other thing that this really requires is focus. You can't be off doing 10 different things, trying to implement 10 different trading ideas, unless you've developed that, obviously. But most new traders or most people that are having a challenge developing their edge, you're not focused. And you might think you are, but you're really not. You're not focused. The other really important thing that you need to do is you need to manage your mental energy and your emotional pool. For example, and we're going to say that you entered a trade, and that trade now is a losing trade. And so maybe it's a losing trade beyond your stop loss, and you're still in that trade. You didn't get out when you should. So number one, is that good risk management? No. Is that an efficient use of your capital? No. And let's say that this trade you entered in the morning, and you've been checking on this trade, or maybe even watching the chart throughout the day thinking, oh, it's going to turn here. Oh, it can't go past that support, or it can't go past that channel, or here's the 50 moving average. It's going to bounce off that. It's got to. Is that an efficient use of your time? And what that is doing is, number one, it's breaking all of the three pillars of what successful trading is about, but it's draining your mental energy and the emotional pool that you have to look for other trades, or that you just have generally in life, so that you can be focused your next trading session. Let me provide an analogy or an example for this. Imagine you want to be a professional cricket player. Look, I know nothing about cricket. I know it's also called bowling as well in some other places. Now, I've read about it. I've watched a couple YouTube videos about it, but I'm still kind of confused. But I'm from the U.S. here, so I wanted to give an example that the rest of the world actually looks at, give some love to the rest of the world instead of taking from the standard old sports that we have here in the States. So let's just say you don't need to know anything about cricket, but you want to be a professional cricket player. That's your goal. Now, let's say that tomorrow you get up and you go to the football field and you learn how to tackle, you learn how to throw a football. Remember, you want to be a professional cricket player, but this is what you do. You get up and there's a football field, and you go there and you learn kind of football, and you kind of do some scrimmages and stuff like that. And let's say the next day you go to the soccer field and you learn to become a goalie. You kick the ball around, you run around, maybe you play forward, and that's kind of what you do that day. And then let's say the next day you go to your local basketball court, you shoot some threes, you shoot some free throws, you start doing some dunks, you really get into it, and you kind of spend a full day doing basketball. And let's say the next day you throw on some skates, you get a hockey stick, and you start hitting around the puck. I don't know much about hockey. I should, because I'm in a really big hockey state. But let's say that you do the hockey thing, whatever people in hockey do. Well, if you look at this, remember, you wanted to be a cricket player. Now, you might be, if you did all this, I think you'd be pretty fit. You'd have a pretty well-rounded understanding of maybe the rules, because you'd have to understand the rules for each one of these sports. But are you any closer, other than being probably in good shape, are you any closer to developing the specific skills of being a top-class cricket player? There's probably even a name for what a top-class cricket player is. But are you? You're not. And if you look at just this example, this is how most traders trade. They say they want to be a trader, but one day they're doing something else, and they're trying to swing trade. The next day, they're trying to scalp trade on a different setup using different fundamentals, different technical analysis, different indicators. And then the next day, they're looking to maybe do a long trade off the daily time frame, and they're using different indicators. They're using some of the same stuff, or maybe they're just trying something else. And then the next day, they're completely trying something else as well. This is how most new traders, and I get it. I went through the same path as well, but I learned really early on that without focus, I'm destroying the most valuable resource, which is time, in addition to all the other things that we just previously talked about: focus, energy, mental energy, capital. This type of process of you started with one goal, and then you consistently go out and focus your energies and efforts and time and thought process around different things that aren't focused on what you want to actually become, is one of the biggest mistakes that most traders make, and they find it really hard to overcome. So let's jump into that. Let's talk about the 3 steps to developing a focused trade idea. The first step in developing any trade idea and having an edge in the market is a true market understanding. The next step is aligning that with your personal trading style. And finally, we'll talk about how you combine these things into what I call a one trade idea process creation. This will be much more clearer as we move forward. But let's first talk about the first step, which is market understanding. With market understanding, you're looking to ensure that you have a clear understanding of who the market participants are, also how the market moves, how it works, the kind of the underlying, I say, motion of the market, how it has moved historically, how it is currently moving now, and that you're always adjusting that based on your own fundamental and technical analysis of the markets. Another aspect of that is having a foundation of how to do proper technical analysis. And I'll mention this here in the video. If you're interested in really understanding and developing a technical analysis edge on the market, that's exactly what my training is developed for. You'll see a link below to my website and my Discord group. You can join Discord, send me a direct message and ask how to get started. I'll share this because I don't think I'm going to change it. I've always charged 0.07 BTC for it. That's lifetime access, also lifetime access to my indicators. But this market understanding, when you have a foundation on this across all markets, the market you want to trade, it enables you to then implement the other steps. If you haven't gone through this process of really understanding the market that you want to trade, that's the first step that you need to do. You need to understand who are the participants, how it works, how it moves, how it tends to move, and then you need to have a very clear and concise and really stable understanding of how to do proper technical analysis. The next thing, once you have all that, let's say you have the market mechanics down, you then want to ensure that you're designing a trade idea around your personal trading style. The first thing about that is you want to factor in your time available and the schedule. It makes no sense if you can't commit to a daily trade management that you should not develop a trade idea that requires that. If you can only trade once a week, let's say you only have a couple hours on Saturday. When I started trading and really becoming successful at it, I had a friend that lives close to me that I would see often. He has many kids, the wife, very active in church and everything else. And he only really had a couple hours a week at most to trade. So when I was coaching him and really leading him through trading, we developed a trade idea and trade plan around his ability to only have a couple hours a week to trade. And that was his trade idea. He was trading just that. And he's become very successful at it and because he's very focused. He only has 3 to 4 hours a weekend to sit down and execute and look at the technical analysis, come up with trade ideas from his concepts and his scanners, and then put into motion his trade plan. But he's doing really well with it. So you've got to factor in your time available in your schedule. The next thing And I'm going to say something here that might shock some people, but there's people watching this video right now that don't know their personality. There's people watching this video right now that are consistently year after year, month after month, making the same mistakes in life and the same mistakes in trading. And you have not looked at yourself in the mirror and you have not said, this is my personality, this is who I am. So if I want to be able to trade and pull capital from the market, you really have two choices. You either change who you are in your personality, which is really hard to do for a lot of people, or you realize that this is who you are and you accept it. And then you develop a trade idea and a trade plan around who you are. But you have to know who you are. Most people don't know who they are. They don't have a clue. That's why trading is a really good thing to get into, because you either lose all your capital and you give up, or you discover who you are and you develop a trading strategy around that. It's really only two paths. And I'll share two things from my personal journey in trading. First up, there was no doubt in my mind that I was going to be successful trading when I started. I didn't have any doubt. There was really no option. It was when I decided I wanted to do it, I was going to be successful. So I didn't even, there was no, when I started, for instance, and I'll tell this story maybe some other time, in the Forex market, when I started trading Forex, I had lost not a lot of capital, but I lost capital and I had a drawdown pretty big, emotional trading and everything else. And I did the steps necessary to be successful. But the capital that I lost, there was no doubt that I was going to make it back. Now, I don't know if my reasoning was sound at that time, because my reasoning at that time was, well, if I lost X amount of capital in trades, then that just means that I can make X amount of capital, which is true. But I was trading at tremendous risk. So I'll go through that story some other time. But there was no doubt that, number one, I was going to be successful in trading. I didn't have any doubts. It was hard. I'm not going to say it's not hard, but there was no doubts. And there was no doubts that I was going to make that capital back and more. There's no doubt in my personality. Another aspect that I've had to deal with in my personality, and I share this a lot in Discord, is that oftentimes I'm early in trades, and I call that a probe position. I am always getting better at being patient, especially on my scalp trades. I find that I'm early on my scalp trades, but I'm ultimately 90% of the times right, or I'm out of it right away if I'm not right. But I do a probe position because for some reason that allows me to watch the movement of that. And oftentimes that probe position is such a meaningless position, but it's part of my trading personality. I find that the trades, and I've journaled this and I still do, that when I do a probe position, it's such a meaningless size, but when the trade gets to a point where I probably should have been patient for, that's where I go at full size, or maybe even I go heavy if I have high conviction on that trade. I did that just this week on a couple trades within the Forex and equity market. I had high conviction on both the trades, and I took them to a high conviction rate, but both of those had probe positions. But I learned that through my personality. And I developed a trade plan to minimize my risk and to trade accordingly to my personality. And I'm consistently trying to figure out, why can't I just be patient for it? What part of my personality do I have to be part of the action? What is it? There's some things that you're never going to figure out about yourself. It's kind of like the meaning of life. But if you can develop a trade plan around that to protect yourself against yourself, you're on the right path. And that's part of knowing your personality. The next thing is factor in your experience. This is such a hard thing because oftentimes in trading, most traders give up about the time that they're about to have success because they're not following a lot of the advice in this video. But a lot of this in trading comes down to just having enough time in the market, just trading, just experience. It's just like I said with cricket. If you want to be a professional cricket player, you got to play cricket, and you got to consistently play cricket. You got to really be a student of the game and really understand every little nuance about it if you really want to be one of the top elite players. It's the same way with trading. The next one we talked about is you should be measuring your ability to focus. So if you have a low tolerance to focus now, you should be working on that. But then you should also be developing a trade idea around your ability to focus. Maybe you have to do quick trades. For some people, a swing trade, they just can't trade mechanically in a swing trade. So if you have a low tolerance for ability to focus, then scalping is perfect. Be in and out of a trade within an hour, hour and a half. And sometimes if one way to look at this is that if you're scalping and you have a low tolerance to focus, you can do 2 to 4 hours a day or something like that. And a lot of those trades, they either work out right away or they don't. If they don't work out right away, you're out of that trade. That's your trade idea. It's like, I'm gonna pick the pivot points where I think the market's gonna turn. I'm gonna do my technical analysis accordingly. And then if it doesn't move in my favor, I'm out of that trade. That setup wasn't right. But you have to know yourself. You have to know your personal trading style. You have to know your ability to focus. You have to know where you're spending your energy, where you're spending your time on all aspects of the trade. We'll get into more details here in a second. The next thing is support system. This is something not often talked about in trading, but if you're trading and you have a significant other, for instance, like a wife or a husband or a girlfriend or boyfriend, that oftentimes they don't. Well, if you're not successful yet, it's hard for them to be supportive. And even if you become successful, they oftentimes will not believe it because they don't have a true understanding of what you deal with every single day. They don't have a true understanding of the amount of effort and time you've put in to be able to become successful. They don't have a true understanding of all the they hear that trading's a risk. They don't, and oftentimes they don't know anybody else that's been successful with it. So you're just kind of this, you're out there and they trust you, they believe in you, but they're still skeptical, and they're always skeptical. I can tell you firsthand, at least in my life, the way that my wife has been with me, I've had multiple kind of changes, but one thing she's told me is, I don't care what you do to make money as long as it's legal and as long as it's consistent, and you kind of tell me what can I expect every quarter, and then we make that, and then of course she'd like to see it growing. So she never really has kind of known what I've fully done in a lot of things, and with trading, it's the same type of thing. She supports me, but the second that in my trading I don't meet my quarterly goal for my draw for that quarter, then we're going to have some challenges. So, that's an aspect that many people don't talk about, is that understanding how you're going to deal with your support system. How is this going to, the type of trades that you're doing, does the people around you, because it's just you against the market. It's only you. Now, if you're like, for instance, let's say you're part of a few groups, or you're in my Discord group, you're around like-minded people. They want to be successful with trading. You're around someone I'm active in Discord. I answer questions. I'm honest. I'm upfront. I don't sugarcoat stuff. I'm still kind of nice about things, but I don't try to sugarcoat stuff. I try to tell people the truth, even if it's, I'm really not one of those rah type of people in trading about that. I'm always going to be giving you the kind of latest meme or these motivational quotes. I want everybody that's watching this and in Discord to have success, but you got to find your own path. But oftentimes you have to have kind of a support system, and you have to be your own support system, because no one cares about your success more than you. So realizing that you have to take the responsibility to be your own support system, and then, maybe find a mentor. I have mentors. So I have 2 mentors right now that are mentoring me to get to the next level in my trading. And they help me tremendously. So that can be one path for some people, but that's not for everybody. I tend to be able to follow the advice really well of mentors, and I like that process. But at the same time, I also have developed my own support system so that I'm consistently growing as a trader myself. I'm holding myself accountable. So you need to ask yourself, are you holding yourself accountable? And are you letting yourself slide? If you hired yourself as a trader, would you fire yourself? If you hired yourself as a trader, if you had, let's say, had a large amount of capital, whatever number you want to put, large amount of capital, and you said, look, I'm gonna hire someone as a trader. And then you looked at the results that you as a trader have had over the last quarter, over the last week, over the last day, and how you spent your time and energy. Would you hire yourself or would you fire yourself? And a lot of traders would, once they answer that question, they say, well, I think I might fire myself. So it's either you fire yourself or you say, well, what are the specific things that I need to correct in order to be successful at what I'm looking to do? So it's really developing your personal trading style. So let's now get into the mechanics of this. So we talked a lot about kind of the emotional side, the individualistic side of trading. Let's talk about really how you create a trade idea. What are the components of that? What does that look like? What does a full trade idea look like? Well, it usually starts with the type of trade. So we'll get into that. The next thing that we'll cover is we'll talk about the process of a complete trade idea. What does that look like? Now, when we talk about type of trade, it's often driven by time frame. And I know I just kind of jumped into, I kind of went from a very kind of emotional, this is the other thing with trading. In trading, you're going from an emotional to a logical thing consistently. So what did I just do? I kind of went from a very emotional conversation, and I probably even got a little bit more emotional myself, to now I've switched to kind of more of a logical side of trading. You need to be able to do these transitions in trading almost naturally. I've heard this, that, where have I heard this? I heard this, that trading you should be trading unemotionally. And look, I've been in some places that the traders, they say this. Look, someone that says that trading should be boring. I've been in some places, the high capital places, and I'm working on something right now, and it's not boring there. I mean, there's some days where it's boring, and they're cool, they're calm and collected, but I've been in a place where I've seen a phone fly across the room. And that was not the first phone to fly across the room. He's got a phone budget, but he's a great trader. Can't argue with his P&L. But every now and then he picks up a phone and he throws it across the room. So I say that because then he also is very focused, and in some of his trades, there's times where he's absolutely quiet, he's focused, and he's executing his edge, and there's no emotion, but then there's times where that emotion bubbles up. It's an interesting thing, and I've noticed it in a lot of the real traders I've met, and it's a hard thing for me to, I guess, communicate if you haven't seen it yourself, which is that there's always going to be the emotional and the logical side that you got to try to consistently meld together, but you're always going to be fighting against. So when I make these changes, these abrupt changes in videos like this, where we're just emotional and then we go to the logical side, it's kind of mirrors how trading works in the real world. So when we talk about the type of trades, let's jump into that. The type of trade is often driven by time frame, meaning that it's often driven like it's a long-term hold. So when you're developing a trade idea, it's okay, is it a long-term hold? Is it a swing trade? Is it a scalp trade? It might be a breakout trade. So this is where you're getting beyond maybe the time frame. So you're talking about a chart pattern, but a breakout trade would be a type of trade. Maybe you do a pullback trade. So there's your specific bias in one way, bull or bear, and then you've developed a specific pullback trade idea. There's an over and under extension. This is something I trade a lot in the Forex market, and at least the way I define it is that there's an overextension in price value, and then I trade that price value. I trade that overextension, and I'm entering on a very contrary move, but I scalp that move a lot. It might be a pattern. Maybe there's a specific pattern that you've identified. I've talked about this before. I have a 5-try rule in the Forex market. I trade that pretty successfully. When I see that on a specific time frame, I trade that pattern. That's a trade idea. A news catalyst. You'll find this in the equity market a lot. A lot of times the pre-market will be actually trading something, and something will be moving in the trade market or in the pre-market, and you'll look and see that there is a news catalyst there. So then that will be one trade idea, that there's a news catalyst, and the news catalyst probably has the potential for it to continue the movement that the pre-market is trading. That's a really good trade idea if you're doing swing trading or even scalp trading in the equity market. Is typically you're looking for a news catalyst that follows a particular chart pattern that gives you an edge in early market trading or after the first 10, 15 or so is another type of trade. So I'm just sharing these just as examples of type of trades that I'm aware of and that I trade myself. So let's talk about the 4 steps to these trade idea creations. Step 1 is trade discovery. How are you going to discover these trades? Step 2 is your entry process. How are you going to enter this trade? Step 3 is trade management process. And step 4 is exit process. Now, for the very bright and intelligent people out there, people that are much more intelligent than me, you're going to notice a trend among all these ideas. There's one word in common, and that is process. And I use this word very intentionally because if you are trading right now and you have not sat down and systematically and methodically planned your process of every minute detail of your trade, beyond a doubt you are wasting time, you're wasting mental energy. And this is even the process of how you look at a chart and the order that you look at indicators and how you look at a specific indicator. And I'll ask you this. If you use an indicator on your chart, have you used that indicator because you learned of it through someone else or you saw it and maybe you've come to rely upon it? Let's say you have come to rely upon it. Have you done the research on how that indicator was created, how it truly works, the history of it? Have you looked at the back test of that indicator in the market that you're trading on just the default settings? Have you done all that stuff? And I'd say most traders have not. Most traders, they look at, let's just say, the MACD. And they say, oh, the MACD is a cool indicator. I understand it. I watched a couple YouTube videos. I maybe even read it in a book. I've seen some ways to trade with it. But they haven't gone to the next step. They haven't said, well, who created the MACD? Why is the MACD created? How does it really work underneath? And has it been back tested? At what time scales? And if it hasn't been, can I back test it? And does it fit within all the other things that we've discussed within this video? But not only that, do you have a specific process on exactly how you look at that indicator? When I get into the examples, this will be very clear. But why do I talk about process? Why is that word so important? A good example of this is if you know anything about aviation, if you've been in a plane, you know that there's not just one big red button that a pilot jumps in the seat after drinking all night, hits the start button, and then starts taxiing and taking off. You know that doesn't happen. You know, for most pilots, most people know this. They've seen this in movies. They've at least experienced or at least seen this, that pilots have what's called a pre-flight checklist. Now, a lot of this is done on tablets now. But one of the things to look at, this is a pre-flight checklist, is that these pre-flight checklists, they're written down. There's an order to them, and they're binary, meaning there's either a yes or no answer to these questions, or there's 1 step, 2 step. So if we just take one of these, I'm not going to point out specifically, but in the before starting, the throttle's start levers says closed and cut off. It's really clear if you know, if you're a pilot and you've been trained on this, on what steps they need to take in that specific pre-flight checklist. They need to make sure that it's closed and they need to make sure it's cut off. Okay, now we go to the next one, which is the park brake. Set, press, checked. So there's 2 steps. Some of them are just a single step. You got an electrical panel, for instance, and you just make sure that that's set. This type of process is something that you should embrace in your trading. Because when you embrace this in your trading, it, number one, makes sure that you're trading with guardrails on an edge that you've developed. But it also protects the most important thing, which is time. Because if you're following a process that you've developed, that you've said gives you an edge on the market, and the math backs it up, then really it's ensuring that you're always being efficient in how you're looking at the market, how you're doing your technical analysis. And the only way to do that is to develop a process that almost becomes second nature. That you just, at first, you're going to have to struggle through it. You're going to have the sheet in front of you going through it. But after a while, as you get more experience, it becomes part of who you are. That's what you want to get to. The only way that you get to part of who you are is to systematically develop a process that you follow and that you adopt and that you get experience using. So definitely develop a process. We'll be talking about that here as we move forward. So let's talk about how do you create that trade idea process. Now, one programming note on this video, I noticed that my time is around the 40-minute mark. So that means that this video will be really just rounding out these concepts and these ideas. And I'll do another video where we'll just do the examples. So there will be, just given the time, I want to keep this under an hour. There will be 2 videos, and part of that is on some of these concepts. I think I deviated a few minutes in sharing some kind of real world advice and stuff that went beyond what I had on my slides. So hopefully you found that tremendously valuable and it helped you in some way, or maybe you got a couple things here and there that helped you. But we'll continue on here. I just wanted to share that. So if you are watching this on YouTube and you're not subscribed, you want to subscribe. And obviously, if you follow me somewhere else, then go to YouTube and subscribe. So let's continue on, and we'll start with the process of creating a trade idea. So this is the steps, and you want to make sure that you have, especially if you haven't been doing this. First up, you want to make sure it's written down. So your trade idea should be written down. That way you can track it. What's not tracked can't be managed. Something I got from business development. If you're not tracking it, you can't manage it. So it must be written down, your process. That way you can track whether or not you're efficiently using your time, energy, and capital. And if it's not written down, you can't really track it. The other thing is it must be clear and concise. Of course, trading's messy, but you want to be as clear as possible and as concise as possible. Of course, when you're first writing this stuff down, you're first developing this stuff, it might be all over the map, but you always want to whittle it down and whittle it down and whittle it down till it's got just the core elements that is important. The next thing is that it must be as binary as possible. There should be, if you want to speed up your decision process in trading, make sure that, and I use the word binary. I know that's kind of a term that a lot of people don't know or don't use in everyday life, but it's a yes or no decision. You should go into a lot of your trading sessions and a lot of your technical analysis with, instead of being all over the map, get to a very clear, concise yes or no decision. If price gets here, I'm going to go long, and this is where my stop loss is. If it gets here in this amount of time or this market structure, this is what I'm going to do. If it doesn't get here, I don't need to spend mental energy on this trade. And if it never got there and it went against you or went in the direction that you thought, then you missed the trade, or you need to develop a different trade idea around that concept, or you need to change your trade idea. But most of your decisions, you need to try to be as binary as possible. Think of the pre-flight checklist that we just covered. It must have rules. So you should have rules in your trading that adopt to your personality style, adopt to your trades, adopt to the market. And these rules, there should be, with rules are meant to be broken. But there should be some rules that you never break. So it's kind of arbitrary. So if you have a rule that can be broken, there should be a reason why that rule can be broken, and it should be probably rare. But there is certain cases where a rule can potentially be broken, but it should be a very rare case, and it should be a very good case. Now, for something that would be detrimental to your trading and detrimental to your account, there should be some rules that you just don't break. So your trade idea should have all these components. It must be written down. It must be clear and concise. It must be as binary as possible. It must have rules. Now, this starts with your trade idea starts with, oftentimes people say trade setup, but we're talking about a trade discover process. And this is where a lot of people fail and waste time, is that they don't have a really clear, defined trade discovery process that saves them time and that's efficient. And the way I look at it, if we talk about how do you find trades, I really think there's only 4 ways that you find trades, which is there's chart analysis, meaning that you pull up a series of charts and you just, and you'll see this in the examples I give in the next video. I'll do this in one of the trade ideas that I have. I just pull up the charts from one exchange and I just go through it chart by chart. And then I'm looking for specific things. And then when I find those specific things, that gets me down to the 6 or 7 things I should really focus on. The next one is indicators. So you're going to have indicators that you've either developed or that you're maybe using the indicators that I've developed, or that you have other indicators and you're using those for the discovery process of a trade. The other one is alerts. So there might be alerts that you put in, or you might have another alert system. So that's how you're finding trades. Or scanners. So the equity market has some great scanners. Crypto market, kind of, but not really. Forex market, not really, but I think, and I'll be sharing examples from the equity market of scanners I wish I had in the crypto market. Scanners that probably wouldn't work as well in the Forex market, and I've tested scanners in the Forex market. They're just not as reliable as the scanners that I've developed in the equity market. There's really only 4 ways. Now, out of these 4 ways, you're usually going to end up in the same place. If you're doing chart analysis, you're probably already on the step where you're using Fibonacci, value channels, support and resistance, pivot points, indicators, everything. But out of these 4 things, you're going to then go to what is your chart analysis process. And it'll be very clear, and I keep saying this on the examples, it'll be very clear when I share some of these examples. I think I'll be revealing some things that I know this beyond a doubt. New traders, they don't even think in this way. So in the examples, I think you'll discover some things about how I've developed processes and the process of my trading, and how I'm able to trade multiple markets very efficiently and still do things like this. YouTube videos, still do my training, still have a life, everything else is because I've developed very efficient processes, and I'm always looking to improve them. So I'll give you a full example. Here's an example of in the equities market, so just think stocks. A long scanner trade idea process. So typically a lot of my equity trades follow this type of thing. And I'll just go through this, but in the example, we'll go through this kind of live. So I run the scanner. I scroll through the results to see immediate pattern. I view it in trading view. Step 4, I write down my initial perception of the chart, and then I grade score that later. That's a big step. You can even do this even if you're not actively trading. Start predicting the market. I know they say you can't predict the market. I do it all the time. So sometimes I'm wrong, sometimes I'm right. But then I grade it. So when I look at an initial chart, I write down and say, well, it looks bullish. And based on this bullish, it's at $13. I think it's going to get $17. I think it's going to get to $17 in 2 weeks. And then in 2 weeks, what do? Well, I was right or I was wrong. And why was I right or wrong? And then I grade that. It's a C, it's an F, it's an A. And then I look at indicator 1, and then I look at indicator 2. And I have specific ways that I look at those indicators. And then I do my value channel analysis decision, and that goes to a binary decision. And then I do my moving average analysis decision. I've developed this process, and I do it in this order every single time. And the reason why I developed this process is because I don't have to think about whether or not it gets to the bottom of this process. So at any point in time, if it does not pass these hierarchy of process decisions in an order that I found that has my edge in the market, I stop looking at that because it did not pass a binary test for that specific step. So as we move down, I'm just going to go through this full thing, even though it's hard to visualize without an example, but I think you'll get it if you've been trading. I'm looking at price action and volume analysis. And then at that point in time, okay, you know what? It's passed a majority of my tests. I add it to my trading view watch list. And then I identify my pre-market analysis. So I actually go through and say, here's what I want to see pre-market if it is pre-market trading. And then I define my price levels, I identify my stop loss, identify target 1, target 2, and upside high. I calculate position size. I add a detailed note in trading view, and then I journal that trade. This is my trade idea process. This is just the entry process. So this is just, look at this. This is just the entry process. This isn't the management process. This isn't the exit process. You should have this level of detail for every element of your trade. Because when you do this, for some people, it'll be like painful. It will be like you'll be fighting it. And you'll look at this and say, okay, I can just kind of wing it. No, you can't. Go ahead. Wing it. You're going to be wasting a lot of time. Create a process. Follow the process until it becomes second nature. And you will be amazed at how efficient you are at looking at charts. And how efficient you are with time and how much better of a trader you become. So let's talk about the trade management process. Now, on the remainder of these, I'm just going to give high-level tips because once you kind of see an example like I just showed of how you go about developing a process for just one element of it, then you just duplicate it on how you do your trade management. So in trade management, you want to first define is when and how will you monitor these trades. It shouldn't be up in the air. It should be, I enter a trade. So in my equity trades, I enter a trade, I put my stop loss in. I don't typically move it unless something is rare happening in the market. And then I have target 1 and target 2 set. And then I have a daily trade checkup that I do on my trades at the end of the trading day. And then I make very binary decisions based on whether or not I've been more right or more wrong on where that trade is going based on how I entered. But I do that every single day, and then I follow that process. So I have a when and how I monitor my trades. The thing you want to write, though, is what steps do you follow when you pull up a chart? You shouldn't just look at your position and just go, oh, okay, here's what's happening. No, be very focused about it. Be very intentional. Pull up your chart and say, I'm going to first look at the price action and get my initial gut reaction because that's important. Then I'm going to look at moving averages and tell me, and I'm going to look at the moving averages based on how I've defined to look at moving averages, and that's going to get me to a binary decision about where I'm at in this trade. And then I'm going to look at indicator 2, and indicator 2 is going to tell me whether or not I was right or wrong. These are the type of things that you'd want to put in your process. Next thing is, what are your rules and how do you record them? So if you can't track it, you can't manage it. I said that already. So you should have rules, and then you should have how you're going to record them. So then you can, for the longest time for me, when I got in some trades and they were successful, this is so frustrating. So if you ever had this happening, this can be frustrating. You have a series of winning trades, but you really don't know how you discovered those trades. When I first started trading equities, that happened consistently because I was using so many scanners or so many ways. Sometimes I'd see something on a front page of like FinViz, or I'd see something on another scanner or whatever else. And then I would trade my technical analysis, but I didn't record precisely where I discovered that trade. So then I'd have these big winning trades and I'd go, well, how the hell do I repeat that? So if you don't get into the steps of recording this information, you'll be very frustrated as you move forward. So please learn from the mistake I've made in the past. Next is, do you end every trade management session with a clear answer? And how long does it take you to get to that clear answer? You should not end a trade management session with, oh, I'll just kind of stay in and see what happens in 2 hours. Well, that could be your decision, but it should be much more definitive than that. So just make sure that you end every trade management session, and the process that you develop gives you a very clear and focused answer. So let's talk about trade exit overview. So when we talk about trade exits, the one thing you want to have is, how do you exit your trades? So this is something that is individualistic to everybody, but you shouldn't be winging it. You shouldn't be seeing something move and you're in profit and you're letting fear drive you. Fear of missing out on profit. So if I get out now, and I remember distinctly, I think the last week or so, someone was in a trade in my Discord group, and they asked basically, I think something along the lines, do you think it's going to continue to move, or do you think this is a good way to get out? And part of this trade too was that they were in a losing position in this same instrument. So they had a big loss in this, and then this one trade they did was successful, and they were having a hard time disconnecting the two, when it's really they don't have anything to do with each other. The first trade was a bad trade. The trade that they just recently did is a good trade. But then they were having a fear that if they got out, that they would get out too early. And I think they did get out too early, and it continued to kind of move in the direction. But one thing I said on that is that you need to be okay to get out of a trade and have the market move without you in it. Be completely flat. And the market can be, it's always going to be, that's always the case. There's always another good trade out there. So another way that I look at this too is that, well, I read this in a book and I don't remember what book, but one of the traders said that I look at my profit as my money. So when I'm in profit, I'm paying myself along the way. And I think I'm probably mixing a couple different ideas, but I'm paying myself along the way because that's my money that the market is holding on to. So I've kind of adopted that personal feeling in a lot of my trading too. I tend to take profits along the way because I look at when I'm in profit that's my money. The market is just holding it for me temporarily. And if I let that trade go against me, then I'm really giving my money away, even though it's not my money until I exit that trade. So that's one way I've looked at it. Another way to deal with this, for instance, is that you can scale out of trades. So I do this a lot, is that I might scale out at a 70% and then leave 30% in there and then leave 30% still in profit. Maybe let's say you're up 30% for something and you said looks like it's going to turn here, but I don't know. Well, exit 70% of your position, leave 30% at a 15% profit, and maybe it will run, maybe it won't. But it's so managing this, if you've read any trading books or watched other videos, and a lot of people have talked about this concept, I'm sure. The thing is, you should develop this process that you don't think about and that works for you and your personality and how you trade and your trade ideas. So you should have, obviously, a process of how you exit these trades. What are your rules for your exit scenarios? So a lot of times some of my trade ideas are patterns I'm looking for. So when I'm scalping, I don't exit the scalp until I see a pattern that identifies to me that it's going to turn against my scalp. Another thing that you might do is, like I just mentioned, you exit 70% and then you leave 30% in to run, still in profit. I'm starting to not like the trade concept of moving your stop loss to break even. And I haven't fully developed how to communicate this. I've heard some other people talk about it, but there's something inherent about that I don't do a lot anymore. I'm not doing that a lot anymore. What I'm doing as I've developed more and developed even a greater edge is that I'm usually just taking profit right there. When I say that, well, let me just move my stop loss to break even. I'm usually just taking profit and saying, nope, that trade's good. It's over. I'll look for the next trade. Or I'm putting it in profit. Or I'm actually keeping the stop loss where it was originally at and saying, that was my original trade idea. And I don't do this a lot, but I do this a lot in the equity market where I will develop a trade idea and then I give it 3 to 45 days for that trade idea to come true. And that's sometimes I'm in a trade, I'm up, and then it goes against me, but then it goes in the direction that I'm expecting. So there is cases for that, but you should have these exit scenarios already outlined. One thing that is important that I was worth mentioning is it set with little adjustment during the duration? This is a hard concept to get across in one little bullet point, but have you set your trade exit rules where throughout the duration of the trade, you're not really adjusting it? Or do you have a trade exit rule where you have to actively watch the movement of the markets more? Defining that is important. That's also a factor of your personality. But that's something, I mentioned this specific point because there really is 2 distinct ways to do that on your exit scenarios. Another one, do you follow your trade exit rules strictly? This is something you should be tracking. So did you put an exit at a certain point and then it looked like it was going to reach there? I'd see this a lot in new traders, is that they identify a target 1 and it's starting to move in that direction and it's getting really close. And then the fear of loss of losing more profits or gaining more profits, they move their target price up and then they move their stop loss maybe up to break even. and then it turns just before, or it turns right at their original target one, and it comes down and it hits their stop. And I see this happen a lot. It's mainly because their original trade idea, their original target was spot on, and they just gave up profit that they didn't have to give up if they would have stuck with their original trade idea. And a lot of this comes down to they're not tracking it. So it might happen time and time again, but you're not properly tracking whether or not it is happening. And there's something strange about people. Sometimes you don't see the same mistakes you make time and time again, unless it's written down for you, unless it's in some kind of data form. Then you can look at it and say, look, my target one is always reached, but when I move my target one, because in real time I see it moving and I get excited in the heat of the moment, I actually miss a lot of these trades and I lose out on 10% profit or something. So it's those type of things that you need to put in your trade idea exit process that is critically important. Now, what to keep in mind with everything I've just covered here is think back to that original list that I gave you on the trade entry process. That was a detailed process that you'll see in examples how it unfolds. But every one of these elements that we just discussed are some of the key points that you want to keep in mind. But you should have the same type of written process down. And after a while, it will become second nature. So let's talk about what will be in the next video. I'll start the next video with an overview of my trade ideas I trade. This is about 60% of the trade ideas. So I'll start here in the next video. We'll just do an overview that will set the table. And then we'll get into some examples in the equity market, in the Forex market, in the crypto market. So what I would suggest that you do right now is that if you've taken notes, hopefully you've taken notes, is that you start really developing these processes. If you're still a little unclear on some of this stuff and you want to see some tangible examples of this, that will be the next video. I anticipate it'll be out the next day after this is released. So you'll definitely, if you're watching this on YouTube, you want to subscribe. And I'll end with this. If you really want a true understanding of how to develop an edge off just straight up technical analysis trading and understand how markets work and how to develop your own trading style based on that, the next step is simple. Just go down. You'll find a link to the Discord group. You can send me a direct message on how to get started with the training. You can also see a link to my website that has a full overview of my training. So definitely check that out if you're interested. I look forward to seeing you in the next video.